Now most people look at candlestick charts and look at random green and red bars all over the screen. But every single one of these candles actually tells you a story about buyers, sellers, momentum, fear and liquidity. And once you understand how to actually read these properly, the charts start making way more sense. So today we're going to break down what candlesticks actually mean, how to spot momentum, what wicks really tell you, and then the candlestick patterns that genuinely matter in trading. So I'll keep this simple. So let's start with gold and we'll dabble into a little bit of Bitcoin as well. So now let's first understand what a candlestick actually represents. So we are going to be looking in the hourly time frame. So let me tell you exactly what we are looking at. So every candle tells you a battle between buyers and sellers over a certain period of time. So if you're in a 1 hour chart, then one of these candles represents a 1 hour of the price movements. 15 minutes will be 15 minutes, 10 minutes, you get the idea. So currently we are in the 1 hour time frame and each of these candles takes 1 hour to fully form. So every candle has 4 main points: the high, the close, the open and the low. So when the candle closes above where it opened, it usually means green or bullish. So that actually means that buyers were stronger in that period of time. But then when the candle closes below where it opened, it's bearish or red, meaning sellers had more control. Now this is actually where most beginners stop learning, but the real information comes from understanding the strength behind the candles. Now looking at candle sizes, we can see the momentum of each candle. So large aggressive candles usually mean strong momentum. You can see the strong momentum that we have in this area here. So pretty much if gold actually suddenly started printing multiple large bullish candles in a row, that would mean that buyers are aggressively stepping in. But then the candles become weak and small, and that usually signals indecision or slowing down momentum. This is very important because it can signal if this move is healthy or if it's exhausted. Now let's talk about one of the most important parts of the candlestick analysis, the wicks themselves. So wicks actually show you rejection. So if you see a candle with a very long upper neck, that means price moved higher, but then sellers aggressively push that price back down. And that's rejection from higher prices. So if you see the longer lower wick, that means that sellers were pushing that price down, but the buyers stepped in aggressively to push it back up. And you can see that exact thing in these areas. So we have a push down from the sellers, and then we have a push back from the buyers, closing that price at this level here. So this is actually where wicks are very, very useful, because a lot of the time they reveal trap traders or liquidity grabs. So for example, at this location here, so gold starts moving up and coming past the previous high, people get excited and enter longs, and then suddenly price reverses and leaves a huge upper wick. And that is actually what a failed breakout is called. And now we get to the patterns that actually matter. So I'm guessing you guys have seen many people online telling you this works and that works, and you know, their whole system of candlestick patterns work the best way. But honestly, most of these are actually very, very overrated. So the main ones that I actually pay attention to are engulfing candles, hammer candles, and finally doji. So a bullish engulfing candle pretty much is when a strong bullish candle completely takes over the previous bearish candle. And we have an example of that right here. As you can see, this bullish candle completely takes over this bearish one, well, which is obviously red. It's called a bearish candle, and a green one, bullish, like I said before. So what this actually signals most of the time is that the momentum is actually shifting towards the upside. And the result of that is actually what we have seen in this area. And now we get to a hammer candle. And what a hammer candle usually does is it shows a longer wick, which actually does show rejection from these lower prices. And now finally, we get to the doji. And what the doji candle does is that it represents the indecision in the market. But there is a very important part. The patterns only matter when they appear in these right locations. So a bullish candle in the middle of nowhere doesn't really mean much, but a bullish engulfing candle forming at a major support level, well, that becomes a lot more meaningful. And now this is actually where traders start separating themselves from beginners. So professional traders don't just look at candles themselves, they look at where the candles are forming. So for example, we have rejections at this resistance level of 77k. And you can see the massive wicks that these candles are leaving, showing that the sellers are pushing back pretty aggressively. And the same thing kind of comes for the downside as well. You can see the big bearish move that we had for the downside, and buyers have pushed that price back to about 77,188. But then that momentum continues and we come all the way down past that support level eventually. But the fact that these big wicks are here shows you a close-up of what is happening inside the market. So now, for example, if Bitcoin were to now reach a major resistance level and suddenly start printing rejection wicks and weak momentum candles, then that would tell you that buyers may be actually struggling. But then on the other hand, if price taps support immediately and forms strong bullish candles with momentum, that's a much stronger signal. So candles actually give you a context of the overall market behavior. And once you understand this, charts actually stop feeling so random. And now at the end of the day, candlestick charts are really just visual representations of psychology: fear, greed, momentum, rejection, and indecision. And the better you get at reading those signals, the better you'll understand the market overall. Now, if you enjoyed this video and want more trading education explained simply, then make sure you hit that subscribe button. Now, if you guys want to be trading on the best platform that there currently is right now, then make sure you check out that description box down below, where you'll find a link to Evedex. It is the platform I use for all of my trading as well. There's a lot of nice bonuses in there, a lot of nice challenges. You can win iPhones, AirPods, and all sorts of cool things. So make sure you check that description box down below. So drop a like, that'll be greatly, greatly appreciated. And I thank you all for watching, and I'll see you all in the next one.